Welcome to the latest edition of The Bull, the Bear, and You as we navigate what is happening in the economy and investing. I'm Stacy Smith, and I urge you to hit the like or the subscribe button to whatever platform you happen to be watching or listening to this program on. Well, this is not going to be a ho-hum week in regards to investing or the economy. On Tuesday, the nation will decide whether to elect the current vice president or a former president to lead the nation for the next 4 years. But that's not all. The day after the election, the Fed begins its two-day meeting, and on Thursday, it will announce what it's going to do about interest rates. And this past week was not a good one for tech stocks, with the Nasdaq suffering its first weekly loss since the last week in August. There's a lot to discuss on this week's edition of The Bull, the Bear, and You. And with me to talk about the economy and investing is my panel of financial advisors and experts, and they are Carrie Coghill of Coghill Investment Strategies, based in Pittsburgh, Frank Rossetti of HF Management Company, also Kim Forrest of Boca Capital Partners, and Michael Godwin of Fergasso Advisors. Thanks again for joining us for The Bull, the Bear, and You. Let us begin by taking a look at what has happened in the market since the last time we met, and what has happened is somewhat of a market slide. In the previous 2 weeks, the three major indices are down anywhere from 1.5% to roughly 3%. Last week, by the way, was the first losing week for the Nasdaq since early September, and it's the first time the Dow has lost 2 weeks in a row since end of May. So, Michael, I'll give you the first shot. Is there any significance to any of this, or is this just as I like to say, the market breathing?
Yeah, a huge significance, Stacey. Anytime the market's down 1%, I think everybody should hit the panic button and sell and go right to cash. I mean, my goodness. I mean, the market has done, up until a few weeks ago, I think this might have been the best start to the year. I know we're almost at the end of the year. It might have been the best start to the year since in the past decade, at least. And that's coming back on a great year in the markets in 2023. So the market has done incredibly well. I think we're, historically speaking, a little bit overvalued from a valuation standpoint. Earnings expectations, as Kim can talk to, were probably through the roof. So even though some companies did very, very well from an earnings standpoint, expectations were sky high and they didn't quite meet them. So you got a little bit of a pullback in the markets here. I don't think there's anything to really read into. I know we have an election coming up tomorrow. Volatility is actually a lot lower than I would have expected coming into an election. But I think the markets, taking all that aside, will look to the fact that we have some sort of clarity on the direction of the country one way or another, hopefully by Wednesday. That take that out of their system, the markets should sort of resume, I don't say it's upward trend, but having a certain point of uncertainty coming out of the markets with the election coming up, I think should help.
I'll jump in next. I saw the sell-off kind of, and maybe this is because I look at tech all the time. I mean, I look at other things, but tech's easy, so I, breeze through it every single day. I think there's a lot of worrying about, is the AI trade, and that, we're going to have just about, forget having cornfields anymore. We're just going to have data centers covering the earth. It's hyperbole, but not really. And I think there's some question about, is generative AI really paying off? And you saw that in some of the big sevens earnings reports, and just the fact that people are finally waking up to the fact of like, hey, who's going to pay for this? And what does it do? And should we actually, promote this? I saw some of those questions wrinkling the brow of many tech investors, and you could see them selling off a little bit in some of the Magnificent Seven. And it's an area that I keep my eye on very intensely. I think, like most of the tech crazes in the past, investors have very short timelines and may be bewitched by the coolness of the technology, and not necessarily answering the question about, how much would you pay for access to this? Or would you pay for access to this? So those are my questions, and I think they're finally getting asked by investors.
I'm pretty sure, Kim, to answer that question, I think because of the shortage of people and the need for something else to do the work, whether it be robots or AI, I think that as this stuff gets developed, I think corporations will use it to do work because their people can't do all the work that will be put on their desk. And the AI side or robot side should help with that because it's not likely that we're going to see an explosion in people anytime soon in this country. I mean, when I talk to young people, large families are a thing of the past. A couple notable exceptions, but that being said, uh, this stuff will do work once it's developed. You can probably address what that means once it's developed. You have an idea of what that takes. I'm clueless.
Right. Well, I guess I'm talking about the shorter timeline kind of investors.
Mhm.
And those are the ones I fear because they don't really understand what they're buying and they're in and they're out and they're nervous. And so that's kind of what I'm addressing.
I think that with earnings season here and this talk about earnings and AI and all of that is really, really valid to what's going on day to day in the markets. But I actually think that the reason, easy to look in the rearview mirror, but the reason why this market really struggled in October had more to do with bond yields than anything else. We actually are seeing a resurgence. That's a dramatization. We're actually seeing a little bit of a bump in inflation. And we thought we were done with this. So we've seen yields across the board jump in October. And that has, a trickle down effect to stocks and how stocks perform and which stocks perform. So I really think that that's what we're facing right now is, is inflation really gone? Did the Fed lower too much too soon? Had that discussion. And are we actually going to see ourselves in a period of stagflation versus an expansion?
I want to get to the Fed here in just a moment, but I want to go back to something, Kim, you said that, and this goes back to also what you said about the short-term investor. I mean, AI just really, I mean, they may have been working on it for the last 50 years, I don't know, but it really just, emerged in the last, year and a half, 2 years maximum?
Yeah.
And some people think that they haven't seen enough out of it already?
Yeah, actually. Microsoft is trying to sell a $30 upgrade to its a month for business customers, and they haven't really glommed onto it because people don't know how to use it. And Microsoft is I have friends that are working on this, trying to get the stuff that Microsoft does for us, like Excel, their Great Plains software. I can't remember what it's called now, but it's their accounting software. They are trying to integrate Copilot, which is OpenAI, into something that's very workable. And guess what? It's harder than they thought. Oh my God. Like, welcome to technology. Because, us technologists are always like really sure that we can do something in the next 15 minutes, and it might take 18 months. So the rollout is slower than people, and adoption is slower than what people want. The other thing is there's a high rate of inaccuracy that can't be addressed easily. And that's for maybe another time to talk about. But those are the concerns that people have. And they're not going to pay $30 per month per seat if you're getting garbage answers back, or if it's not improving your productivity by at least $30. Yeah, the math really is that simple. So early adopters get burned and with the money, but maybe they understand how to use it best. This is a problem in all technology. None of this is new. It's just that we have to remember as investors that this happens.
All right. So if we're investing, Michael and Carrie and Frank, is this one to get into then? Just, I mean, not necessarily any particular company, but in this aspect of technology? Or should you wait until things, really look as if they're working better?
Well, knowing when to get in is always the challenge because by the time we all feel good about something, it's too late. So I do think that looking at what companies are really creating and applying AI, and understanding that you may own a company that goes down before it goes up, but you have confidence in their ability to build a platform that is going to succeed. You really can't wait to get in. Now, I think another big challenge, and the biggest challenge that we're watching, is really the security and the privacy. So whatever I put out there, whatever questions I ask, it's out there. There's no privacy. So for a company to use AI in a way that's going to help give them a competitive advantage, you don't want to ask any questions that might then be turned around and supplied as an answer to one of your competitors.
Interesting.
Yeah, there's
I
a
see.
myriad of. Go ahead, Frank. Sorry.
When I talk to my son with the firm that owns the firm I used to own, how they're moving on AI, they're moving very slowly because we, of course, have, like many industries, have a huge privacy requirement, and we have to be very careful. I should say, you all have to be very careful on how your data is exposed, because the worst thing that could happen, and it happens every day, unfortunately, is for a bunch of names and social security numbers and significant data to get out into some bad person's hands, and that would be a major problem for you, the firm you clear through, or work for, and it's just a major problem. So they're going very slowly because of this security issue, which is one of the reasons why they're beginning to wonder where the money is on these things. Except, and Kim, I think it was Alphabet that had much higher earnings than they expected from their AI division, whatever they call it, because all these names run together for me. Am I right? Was it Alphabet?
Yeah, it was. And I really think what they're doing, well, I don't know for sure. I've read a whole bunch of stuff and it's not clear. I love when companies are not clear, said no one ever. But I think what they're doing is leasing out their compute power for AI. So they're making a lot of money off of that. So that isn't really answering people's questions with AI and having them pay for it. That is leasing out their infrastructure.
So
Michael, why don't you wrap it up for us?
Yeah, I think your question was, Stacy, like, should investors invest in the AI? And I think, time will tell on what that's going to look like. And it's hard to, if you invested in NVIDIA 5 years ago, 10 years ago, congratulations, you won. But going forward, I don't think it's going to be as black and white as picking one company to do it. There's a myriad of ways you can invest in the AI, quote unquote, boom. Take utilities for an example. And I think we talked about this a few episodes ago. The sheer amount of power that it takes to generate, to power these data centers is astronomical, right? ChatGPT uses 10 times the amount of power that a regular Google search does. So utility companies, whether private or public, they're really going to be a benefit of this, as well as some other companies that can use it tangentially, as opposed to just investing in the chip companies like NVIDIA or companies of that nature.
Okay, good. All right. Changing the subject here, but you guys have talked about this just briefly here. There are two major events taking place this week. The Fed meets. We'll get to that in just a moment. But there's also this, I don't know what it is, a presidential election taking place tomorrow. Not that we haven't been inundated with commercials about this whole thing. So let's tackle the election first. Kim, you want to go first?
No, I don't.
Okay.
No, I just wanted to stop now. How about that? That's like super honest.
Yeah.
I want to see car commercials again.
All right. But generally, as far as the markets go, Kim, any thought on that in the presidential election?
The candidates can't be more diametrically opposed to one another of their view of the economy. And yet the market keeps going higher. So to me, that says we have rational investors saying, hey, doesn't really matter who gets in. It's all about Congress passing bills, writing the checks, doing the work. And even though they're going to shift one way or the other, depending on who gets in, I think that investors think we're in a pretty good space. I think also the rancor that has come up here, that can be assuaged as well when all of the information stops flowing. We'll put it that way. And people just walk away and, wish for car ads instead of political ads.
Yeah, I would echo that. I mean, this really is about Congress as far as we're concerned, because we know that candidates say whatever they want leading up into an election, and then, they either can't get their agenda through because you have a divided Congress, or they just change their mind. So I think it's a much different scenario. Knowing who is president and understanding the breakdown of Congress, House and Senate, is it Democrat, Republican split, that then allows us to formulate what potentially might happen. And our concerns have more to do with taxes, and, just anything, economic policies. Tariffs obviously have been a hot topic, and looking at the implications the policy may have on corporations and then on individuals and their spending.
I can say this, Stacey. I mean, what we're telling our clients is the president and Congress, government, whatever, I think they can have an impact on certain individual companies and maybe a subsector of a particular industry. From the broad market as a whole, you take a look at the data going back to 1936, which is what we did. There's not a material difference between a Republican in office and a Democrat in office in regards to market performance. They just don't have the ability to impact broad markets as a whole. The Fed does much more so. We look at, the unemployment rate is such a big key component of what the market's going to do. And Carrie pointed out to you before, long-term interest rates. We're watching that a lot too, because, and I think she was spot on in the first segment when she talked about the reason why the market dropped a little bit over the past few weeks. Long-term rates have backed up. The president doesn't control that. That's the economy. It's the economy, stupid. That's what actually controls the overall markets, not what a president may or may not be able to do or push through Congress. It can impact it a little bit. Certain stocks, certain companies, maybe a subsector here and there, but the economy as a whole, or the market as a whole, I don't think they have much of an influence over.
What about raising or lowering taxes, especially corporate taxes? Does that make any difference at all as far as the how you invest and what corporations you might invest in?
It did. Again, companies have done such a good job of being able to pass that on or being able to absorb it. I think it actually, when Donald Trump did that, lowered it in 2016, that had an impact overall. If Kamala Harris gets elected, she has talked about probably taking that back up marginally. Not all the way back to where it was pre-2016, but marginally. So I don't think it will have a large impact on overall company profits.
You also have to remember that Kamala Harris nor Donald Trump write tax law. As Carrie said, Congress writes tax law, and they will debate it. And maybe I think by the end of 25 they have to do something because Trump's law expires. And I don't think total expiration of that law is a good idea. Does it need to come back the way it is or be adjusted? I'm not smart enough to answer those questions. But Congress will debate it. Will they do it correctly? I'm going to fall back on what I've said before. Ernest Benn said 120 or so years ago, politics is the art of looking for trouble, finding it everywhere, misdiagnosing it, and then applying the wrong remedies. So we can count on that still being true with whoever's in Congress the next time.
No doubt. All right, let's move off the election. Unless, Carrie, there's something else you wanted to say.
Nope.
No? Okay, let's move off the election and move on to the Fed. It meets this week, a day later than it normally does because of the election taking place. So they will be announcing on Thursday what their thoughts are in regards to interest rates, whether they're going to raise them, lower them, or keep them the same. Any speculation on anybody's parts here? Frank, how about you?
Well, the conventional wisdom is they're going to drop it a quarter point. They've effectively said that. I don't believe media likes to say they're painted in a corner and they have to do it. I don't think that's true. I think that there's enough noise in these numbers these days because of hurricanes and strikes that I'm not sure the numbers are all that meaningful on a short-term basis. So my hunch is they'll probably drop it a quarter, just like everyone expects.
Yeah, the market is currently pricing in effectively. It's not effectively a done deal, but the market really thinks it's a done deal that there's going to be a quarter of a point cut this week. What I do think is interesting is if you asked us, I don't know, about a month or so ago, at that point in time, the market had expected the Fed to cut rates 9 times by the end of 2025. Currently, that has come down to only 5 times by the end of 2025. So in the span of about a month, that's a huge drop in Fed rate cut expectations that the market is anticipating. And that goes, again, to what Kerry mentioned before in terms of this is my biggest concern going in 2025 is that inflation expectations just remain a lot higher than what the market initially thought. So the Fed's going to have a harder time to bring down true inflation closer to that 2% target while keeping the economy on a robust path forward.
And as you once said, Mike, the interest rate, the short-term overnight rate, which is all the Fed really has any control over, has to be relate to what the inflation rate is, and some premium over that. And now they've come with a name for that. They're calling it the neutral rate, and they've said they're fishing for the neutral rate. They're not sure of what that is, and that's the rate that doesn't expand or contract the things that they're in charge of, which is the dollar and employment, inflation and the employment. And who knows what that number is? I certainly don't. And but at this point, it looks like they may already be there or close to it.
Should we discount the last? I guess it would be the October jobs report that was released on November the 1st because of the hurricanes and those sort of things. I mean, it was only 12,000 jobs added, I believe.
Yeah, but there were 100,000 people out of work between the strikes and the hurricanes. So that number was understated by, I want to say 100,000. I mean, I don't have the ability to drill down into that to determine how much of that is one versus the other. It doesn't much matter. So yeah, I think it needs to be discounted.
So I really look forward to the jobs number every month, but I always take it with a grain of salt because the data collection is kind of weird. We're not going into it. Just take my advice. It's weird. But there are 2 other things that I look at. One is weekly unemployment rate or weekly new unemployment, and then the rate that they get from that, or the ongoing continuing unemployment. That data is pretty good, especially if you do a moving 4-week average. So that's every 4 weeks, you're tallying it up. And what this is it's the states reporting people that were laid off. There you go, or out of work. So I think that gives us real data as opposed to the household survey where they're literally calling people up, asking them how many people were working last month, how many people in your household are working this month, blah, 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 right? So that's a little better data. The other thing that's kind of showing some surprising downward movement is JOLTS. And I can't remember what the it's an acronym, but it's the jobs that companies are trying to find positions for. And that keeps drifting lower. And I think that's the big thing that makes me think the Fed is going to lower rates again, because they've said they're not so much concerned about inflation, although we all are concerned about inflation. They're looking at a declining jobs number and the declining jobs that are open for employment, and they seem to be falling. So this is what gives me confidence in that 25 basis point cut this month. And, I'll tell you next month if it's going to happen.
All right, Carrie, you were the first one to say anything about the economy in our discussion earlier today. And so your thoughts on this, because you said you raised a red flag about inflation. So do you think they will be cutting at this point or
Well,
keeping
I think
steady?
they will because, that's what's expected. And I don't see them going back on that. I honestly wish they wouldn't, but I do anticipate that the rhetoric is going to change. That's what I'm really curious to see the statement if he does lower after to really understand. And I think it's going to be a lot of what Kim said. It's going to have to do with jobs. But my fear in all of this is that we may be heading into a period of stagflation because it's still there. Inflation is still there. The question is how much. So I think the next month or so is really going to be going to help us formulate what this economy might look like going into next year. Is this inflation that we're seeing just a little bit of a blip, or is it stickier than we felt or we think? And when you're in a situation where in order to stimulate the economy, you have to do something that can be inflationary, you can really find yourself in a predicament. So I think we need to kind of advance slowly with this and see how the numbers really play out. As Frank said, it's very hard to understand this given everything that happened with the hurricane and strikes and so forth. So hopefully we'll get more clarity as these future reports come out.
For those who have not taken Econ 101, explain stagflation.
Stagflation is when you're in an environment where you have inflation and no growth, basically. So, that hurts. It's if the economy's growing, your wages are growing, and inflation is going, you kind of try to stay even. But if prices are going up and you're losing your job or you're not getting a raise, now it really hurts. So it's a very tough environment to be in.
So have we reached that soft landing everybody was talking about, or are we still flying? Nobody knows.
We're definitely still flying.
Okay.
We're still have meaningful altitude. All right. This economy is not bad. I'm sure there's parts of it that are struggling, like southeastern United States has all sorts of problems, like getting home, and but that they'll work through, and that's going to create a boom to that part of the economy. It's also going to add to inflation because they're going to buy a lot of lumber, they're going to buy a lot of cement, they're going to buy a lot of stuff to rebuild that part of the country, and it's not a couple of counties; it's several states. It's a big deal down there, and there's going to be a lot of construction done, and that's going to make the housing problem more difficult to deal with. All right, just because of the demand to rebuild southeastern United States, and we're not through hurricane season yet. There's another one brewing down around the Yucatan Peninsula or somewhere in the Caribbean, and if it turns into something, this looks like they're projecting this one, and it's way too early to have a clue. To hit the Gulf Coast, which is more traditional, which means we might actually get rain out of this one. Let's hope.
Exactly.
And this really speaks to the point, kind of to pull the election into it. The election has nothing to do with this. So who's president? They can't control the hurricanes. And the trickle down, the impact that has, as Frank said, we're going to have some inflation. When you look at what needs to happen and to rebuild, supply, demand, now your demand for things have gone up, particularly related to construction. And, that's what causes inflation. So it's not just all about this election.
It's more than that. It's also cars. There's a bunch of cars that no longer exist. It's massive what has happened down there, and it's not over. Hopefully it's over, but it may not be.
All right. Good discussion today. I want to thank you for joining us once again. And I want to urge you, if you're watching or listening to this program, to hit the like or subscribe button. And that does it for right now. And thank you for joining us. We'll see you again for the next edition of The Bull, the Bear, and You.